A very warm welcome to everyone joining today. I'm Helen Avery, Director of Nature Programmes and GFI Hive at the Green Finance Institute. And hopefully you are all here for the NEIRF Round 2 introductory session for local government. That's the Natural Environment Investment Readiness Fund. I just wanted to share a little bit about GFI as people are coming in, just in case we're new to you, and we'll sort of wait for people to filter in. So we were set up 2 years ago, seeded by UK government to help mobilise private sector capital towards the UK's net zero and nature positive goals. And we do that by working with the finance sector and other stakeholders, including government, business, third sector, land managers, local government, to unlock barriers and co-design solutions. With regards to nature, we support the Environment Agency and DEFRA on the NEIRF and act as a third-party assessor, in addition to supporting the community practice, which we'll hear a little bit about later. Also wanted to highlight, for those of you who don't know, we launched GFI Hive this week, which is an open resource on nature finance aimed at the finance sector. I think there's a lot of things on there that you may find of use. There's useful reports under resources, there's in-depth case studies of private investment in nature if you're interested in that. There's podcasts. City to Helm was our first one this week, and you can find all that at greenfinanceinstitute.co.uk/GFI Hive, but you'll find it once you get onto the Institute site. And we'll also be working with stakeholders, perhaps yourselves, to unlock some of these barriers and develop some finance solutions for nature. But today we are here to hear about the NEIRF Round 2, its aims, whether it's right for you, and to hear from some sort of examples of projects that are in train and some ideas sort of inspire you to think about applying. I'm going to pass over to Alison Baker at the Environment Agency in just a moment, who's going to walk us through a presentation on the NEIRF. Then I'll share a little about the shared learning and the community of practice, and also sort of points of entry if you're thinking about applying for the NEIRF, some of the sort of the journey to investment readiness it might be helpful to think about. And then we'll hear from Louise Wilson, who's co-founder of Abundance Investments, about the role of local climate bonds, community municipal investments in attracting private investment into nature in particular, that maybe sort of inspire you as a mechanism to think about as you're applying for the NEIRF. And then from Simon Bates of East Devon District Council, who's going to walk us through his project, or their project. They were an applicant, a successful applicant of NEIRF Round 1, so it sort of will help us sort of put things into perspective and sort of give us some concrete examples. And then we'll open up for Q&A. So please note that there is a Q&A tab at the bottom. I think we all know now by Zoom where it is. Please post them as we go along, and I'll come to them at the end. If there's anything a little detailed or complicated, I might ask you to unmute and share it with us. But hopefully we'll have at least sort of 10 to 15 minutes. And those questions we don't get to, there will be an FAQ and a chance to ask further questions in January. And we'll share the details of today's recording and those extra sessions in January at the end. So what time does this session finish? I can see here. Yesterday we ran for about an hour, so we're thinking it will end at 11. Maybe if no one has any questions, we'll go before, but we'll see how it goes. But we thought 45 minutes, it's going to be an hour. You're very welcome. Okay, so with that, I'm going to get going and introduce Alison, who's going to walk us through the NEIRF. Thanks, Alison.
Thank you, Helen. Okay, so I'll just share my screen with you and we'll start the slides. Bear with me 1 second. Hopefully you can see the slides coming up on the screen now. Okay, excellent. So as I said, thank you, Helen, very much for that introduction. Really good to be here and see so many of you on the webinar today. So my name is Alison Baker and I work in the innovative funding team at the Environment Agency. And I'm going to take you through some of the background and the reasons why the NEIRF Fund was set up, and talk through some of the key aspects to consider if you're looking at making an application. So in terms of the background, both the government's 25-year environment plan and green finance strategy set really high expectations of the role of green finance and private sector investment, and the role that that can play in our environmental goals, and both the actions and transitions that are needed to address the climate and nature emergencies. And obviously recently at COP, we heard a lot about that as well, and re-emphasised how we can align private finance to net zero and carbon disclosure reporting requirements. So traditionally, we've looked to government to provide funding, but increasingly we are seeing that appetite from investors as well to finance these actions. And we've been asked by government to look at how we can bring new sources of funding into the environment, in addition to what the government can provide. So to support this, in March 2020 budget, the government announced that they will commit up to £10 million to stimulate private investment and market-based mechanisms. And the NEIRF is delivering on that promise, and we're looking at different ways to generate revenue from environmental improvements and so help stimulate that green finance approach. So the primary aim of the fund is to improve that financial resilience of the nature environment sector and increase the overall level of funding available by stimulating that private sector investment. And fundamental to achieving this is identifying how to monetize those benefits that the natural environment provides, how to create those revenue streams, and in so doing, develop investment propositions. So what are we hoping to achieve through the NEIRF fund? We want to test and demonstrate new natural environment business models, which generate that sustainable financial return, but also contribute to the goals of our 25-year environment plan. And through the projects, we're looking to test some of those revenue streams, what's realistic, what steps will be needed to expand those sources. We want to look at mixing or blending different types of funding from private and public sources. And we want to explore new types of governance arrangements, whether it's community interest companies or trusts that have environmental betterment at their heart. And we also want to look at some of the challenges around definitions and standards and verifications with landowners, stakeholders, investors, etc. And the outcome we want to achieve is we're aiming to drive that innovation in the natural environment sector and bringing that diversity of thought through the projects to some of the challenges we face. And in doing this, we'll stimulate a pipeline of nature positive projects where private finance can play a really positive role. So just to think about where the revenue streams might be coming from through improving the services that our environment provides. This could be natural flood risk management, it could be nutrient management, looking at water quality improvements, it could be encouraging carbon sequestration, perhaps through the delivery of green infrastructure, or creating new habitats. But the challenge we face is how we recognise the benefits, but can we take that one step further? Can we look and understand how we can generate a revenue from these benefits that will create those opportunities for investment? Can we create a market for services such as flood risk management or water quality improvements? Can we sell carbon credits through woodland creation or biodiversity units from a habitat bank, for instance? In essence, we need that investment up front to deliver these benefits, and then to repay that investment, we need to generate revenue from buyers that value those benefits, and most importantly, will be prepared to contribute towards them. And this is what we're trying to do through green finance. So in terms of the first round of applications, just a little snapshot of what we've had. It was heavily a competitive round and oversubscribed. We had over 150 applications. We've awarded project grants to 29 projects, and the distribution of those projects you can see on the map here. What is really important about these projects is that they are replicable and scalable, and that projects have been selected where we can share the learning from them to whether it's for people who are applying for NEIRF in the future, potentially you, or people who haven't applied for NEIRF at all but want to understand what the projects have delivered. In terms of, sorry, I've lost my move on button. We've grouped the projects here based on their primary revenue model. And unfortunately today we haven't got time to go through a lot of the detail, but there is a lot of information on our Sharepoint site about these projects, and we'll share those links later. But broadly speaking, the projects that were funded in round one reflect the relative maturity of the market as it currently is in England. So there was a lot of focus on existing carbon markets, mainly woodlands and some peatlands, but also the emerging net gain market as well. We've mentioned about the learning, and that is a really key objective of the NEIRF fund. It's important that all the projects are able to share that learning, and whilst the funding is obviously really important to support those projects, one of the really key aspects we realise is providing that support to the projects themselves. So we've set up a community of practice for the successful applicants, ourselves and the technical teams across DEFRA and the policy teams as well. And obviously we're now working with the Green Finance Institute and Ecosystems Knowledge Network as well. And Helen's going to talk a bit more about that later. But we're supporting the projects by bringing those projects together, so they've got an opportunity to share how they're developing their projects and share the learning together as they go along and address some of those challenges. We've been providing some webinars for them as well, knowledge sharing sessions, and all the products that are coming out of that are available on our Sharepoint. And Helen and Bruce from Ecosystems Knowledge Network will explain how we can spread that even further than our community of practice. So moving on to the fund itself, hopefully by now you've all had an opportunity to look at the guidance and application form on gov.uk. Just to summarise, it is a grants programme, and as we've seen from round one, it is competitive. NEIRF funding is intended to support you to progress your projects to the point where you've got a compelling case for investment, to the point where it's ready to operate on repayable financial terms. And we're interested in receiving applications from projects that can broadly do two things. Number one, protect and enhance the natural environment in line with the 25-year environment plan. And number two, generate revenue from those ecosystem services in order both to attract that investment and be able to repay it. So in terms of what the funding is for, it's intended to help you resource your project development stage and procure that special advice and expertise that you need. So think of it as a technical assistance programme to help you develop that business case or compelling investment case. And I want to be clear that it's not a fund that makes capital investments in projects on the ground. We do expect projects to be replicable or able to be scaled up. So perhaps think about how your project can benefit other local authorities or organisations, and the project must deliver benefits in England. Again, we are adopting a principle of flexibility in terms of who can apply. So we've tried to make it as broad as possible. And just to run through quickly, we're looking, it's open for not-for-profit organisations, public sector bodies, and private companies. Obviously, we're looking at demonstrating good value for public money. And in terms of ineligible applicants, that's limited to central government departments and non-departmental public bodies such as ourselves. I've talked about the community of practice and learning, and we'll come back to that later as well. So in terms of what the funding will support, it's intended to supplement your own funds and be focused on the additional support that you require to progress your journey towards investment. And Helen's going to talk more about that journey to investment in a bit and what's involved. And we anticipate that the exact needs will vary from project to project. So we're not trying to be prescriptive, but it's likely to include support and advice focused on business development, financial modelling, revenue generation, and potentially communications and engagement as well. There's some more examples on the slide, and there's more details in the guidance too. In terms of assessment, we need to demonstrate the extent to which your projects will deliver on a number of aspects. And we've listed the 4 main criteria here, but hopefully in terms of you've got the understanding that it is about enhancing the natural environment and generating revenue from ecosystem services. So in terms of these 4 categories, the environmental outcomes are key, and ideally we want you to be able to quantify what environmental outcomes your proposed project will deliver. We also want to understand the financial potential of your proposed project model. And as I say, Helen will take you in a bit more detail through that and what that journey to investment involves. We've mentioned about the learning potential of your project as well. That's really key to demonstrate how you will share the learning from your project and demonstrate how innovative as well, and demonstrate an understanding of the current market position as well. And then finally, as you'd expect from a competitive grant, it needs to demonstrate value for money. But we need to have confidence as well that you can deliver your project. We need assurance that you've considered what permissions and consents and other agreements are needed. And we want to understand how your benefits will be monitored and evaluated, and how the levels of investment and income generation will be measured as well. So in terms of where we are now and some key facts and figures, so obviously we've launched the first round earlier this year, and we've got those successful projects up and running. And the second round application window was opened earlier in November, and that will run through till the 3rd of February. The assessment obviously will take place after that, and we anticipate awarding the second round projects in June 2022. Some key points: grants need to be less than 100k in your application, 100% of project costs are available, and ideally projects will have a duration of less than a year, but we have got a final cut-off date there of March 2024. I mentioned the other information that is available, so guidance and application forms are available on gov.uk, and on our NEIRF Sharepoint site we've got FAQs, we've got a project directory and more information about the first round of projects, which I would recommend you look at. There are a number of local authority projects on there. We've got some case studies and the webinars that we've been hosting as part of our community of practice as well. So if you'd like access to that, email us on the address shown at the bottom of the slide. And then finally, before I hand back to Helen, some top tips really we found from going through the round one process. Be as clear as you can about the environmental benefits you're expecting to be creating with your project. Focus on understanding your revenue, how to turn your benefits into a revenue stream that can repay that investment. You will need to spend time understanding your market as well. Who is your buyer? What are their timeframes? And finally, there's no pre-existing handbook or route map for these projects. It's likely that approaches will evolve over the course of your project, which is what we've seen in the first round and the pilots. And you will need to be adaptable and have a can-do approach to make this work. So hopefully that's given you a flavour of what we would like to see in the applications, and I'll hand you over to Helen for the next phase. Thank you.
Thank you, Alison. I'm just going to pull up the next set of slides. Death by slides here today. Here we go. Yeah. You can see that. Yeah, to offer you a sense of really whether you're ready to apply to the NEIRF and what you might expect along that journey to attracting private capital, I wanted to share with you what we've identified as these 8 steps to investment readiness. I just want to point out that this doesn't work for every project. We found that it works for the majority of projects, and as Alison mentioned, you know, things change along the way. This isn't necessarily linear. You might be looking at step 6 before step 4, but these are the kind of points within your journey that you will be looking at. So hopefully it helps you. We developed the monitoring and evaluation plan for the NEIRF, and as part of that process, we interviewed the ESME, EA, DEFRA pilots, and this was kind of there were these common steps that emerged. So applying for the NEIRF, you'll have started to take at least the first 3 steps. I know Alison laid out the assessment criteria. So firstly, you'll have identified the ecosystem service that you can sell, or another way of putting it is you've identified how you're going to generate revenues from your ecosystem service. So what does that mean? It means it could be a sale of woodland carbon credits from a new park or tree planting, and could even be a cost saving reduction. So maybe you do a natural flood management project that reduces flood cost for you, and that saving can be sort of paid back, could be used to pay back a loan, for example. It could be the creation of a habitat bank or visitor fees from, I don't know, a wetland centre or ecotourism site, something like that, an information centre. So you may not have fully fleshed out the exact cost and amount, but you'll have a rough idea of what it is that you want to offer. You'll have identified the sellers. It could be you, perhaps it's you need to engage other landowners, other land managers, perhaps farmers in your area for something more scalable. We'll hear a bit more from Simon later on how it's working for them. You'll have identified the buyers. Who are the beneficiaries of what you're going to provide? Is there a market for what you're selling? Is someone going to buy your carbon credits? Is a property developer going to buy the biodiversity offsets, for example? Or is it your constituents buying services? Perhaps it's several buyers coming together. Perhaps some are private sector and some are philanthropic. And perhaps you've got several things you're selling. So you've got multiple benefits, multiple things you're buying and selling that are going to be bought and going to be sold. But you'll have ideally a real sense of that. You'd have looked at steps 1 to 3, maybe not fleshed them out fully, but you'd have an indication of support for your project from buyers and sellers. And then in step 4 is that developing that business case. You may not have, again, fleshed that out in full, but you'll have a sense of the levels of revenue that you think you could generate and the business case for what you're thinking. And the NEIRF funding will help you develop those out in more detail, and then also pay for you to sort of finish off your journey. So NEIRF funding, step 5, can help you pay for legal fees incurred in putting together a project. Lots of contracts when there are multiple buyers and multiple sellers, so imagine the legal fees. Although there is a lot of pro bono offering from lawyers at the moment around sort of supporting some of these projects. Step 6, and you may have been working on step 6 beforehand, but sort of have you understood the costs and the maintenance? Where's the risk? Who's going to ensure this intervention is permanent? And at this stage, you may well have reached private investment. You know, you may have a beneficiary or buyer who says, we'll pay you up front to make the intervention and we'll buy that service from you. And that's the deal that you have. You have found private investment in what you want to, the intervention that you want to make for nature. In most cases, however, the buyer will say, we'll buy them once the outcomes are delivered. So you'll need to find a bank loan or look to an investor or look to raising the money up front. And Louise can sort of share later about one mechanism that might allow you to do that. So here's step 7 and 8 are looking at then developing that financial model. What's the mechanism you're going to use for that upfront investment? And identifying the financial service provider or investor or consultant that you need to work with on that. So these slides are going to be shared, and these steps are actually on the GFI Hive website on the NEIRF page if you want to take a look a little later. If that sounds a bit daunting, just trying to move, sorry, realising maybe I'm not playing for my current slide, apologies for this. If that sounds a bit daunting, I wanted to share with you the kind of support that you'll get along the journey through the community of practice. And if you think it's a little early for you for applying for the NEIRF, you can also tap into the shared learning of the NEIRF participants. Alison mentioned the Sharepoint, and we'll put the link up to that so you can, the email that you can email to if you want to join that. So the EA and DEFRA and also the Esme Fairbairn Foundation are really committed that these learnings from the NEIRF be shared within the cohorts of projects so that they learn quicker from each other and are supported, but also that they're shared externally, those learnings. And that the NEIRF projects, as I say, receive all the support they need. So if they get stuck on any of those steps I mentioned, there's a community there for them. So if you are successful in receiving a grant, there's a Teams platform that allows all NEIRF grantees, successful grantees, to network and contact each other, and DEFRA and the EA to share learnings and advice and challenges. So you would be really supported. There's also the Sharepoint, as Alison mentioned, on the EA website that has really helpful resources for NEIRF applicants, videos, case studies, but it's also open to you if you're interested in applying, or to anyone who's just interested in the project. So amazing resource if you want to take a look at it. And then finally, the Esme Fairbairn Foundation has funded Ecosystems Knowledge Network, you probably know, and GFI to support the community of practice so that we can bring in our respective audiences to help work through any challenges that projects are having. So EKN, as you know, run by Bruce Howard, is a platform for project managers, land managers, the NGOs, local government, exploring nature and investing in nature. And there are many learnings within that group that can be shared back with the NEIRF projects. At GFI, our audience is obviously the finance sector and private sector, and we can bring that experience to bear. And at the same time, we'll be taking the learnings from the NEIRF and then, where appropriate, sharing those out through our respective platforms. Not all projects will make it to investment readiness, we know this, but we do know that the learnings on that journey are going to be critical in speeding up the overall growth of private investment in nature. So, you know, we have quite a significant gap in funding for nature in this country. So we're really keen to get those learnings out. So with that, I will hand it over to, firstly to Simon, who's going to sort of share with us how East Devon District Council has been looking at this topic and their journey in the NEIRF. So I'm going to stop sharing here and hand over to you, Simon. Thank you.
That's great. Thank you. Right, good morning everybody, and hopefully you can see an opening slide there with my ugly face on it. Is that showing? Great, excellent. It's nice to be here. Thank you very much for coming along this morning. So I'm Simon Bates and I work for East Devon District Council. I'm a green infrastructure project manager, and we were successful with a bid for a project that actually we started calling Crystal Clear Clist Bond. That's a bit of a mouthful. We've changed that to Clist Canopy because our project is mostly about trees. Just a bit of background. I have the nice job of delivering a major new regional park just east of Exeter, and we've written a 25-year master plan, and just to blow my own trumpet, we're really delighted that we've just won the Royal Town Planning Institute Awards for Planning Excellence for the plan and the associated delivery that we've been doing alongside it, such as getting communities involved with tree planting. So this project takes place predominantly in this developing regional park, and it will certainly help us to progress and attract private investment and match that towards the small sums of money that we have as a local authority, that other local authorities on the call will be well aware of the funding issues and challenges. This regional park is about half the size of Exeter, just to give you a bit of scale there. And this bid to the Natural Environment Fund, it all started when I was watching David Attenborough, Perfect Planet, I think it was the programme, Sunday evening, and David, as he does in his inimitable way, was imploring us to act now for the planet and for nature. And I thought, well, Monday morning I'm going to do something. I am going to act, and what can I do? And I thought, well, I'm developing this regional park. We've got 10% tree cover in the park. Can we get that up to 30%? And that, you know, if I can do that, I will have done my bit for nature and the planet. So that's where it started. Thank you, David. And this will give you an idea of the landscape that we're working in. So top left here, you've got the new town of Cranbrook. This is the first major new town in Devon since the medieval era. You know what Devon's like, sleepy old Devon, not much happens here. But we've got this major new town development. Just to give you your geography, running alongside is the Waterloo railway line. And you can see the landscape is, you can see the reason why the new town was chosen as this for this location, because there aren't any protected sites. There's not many heritage features, if you like, to get in the way of the development. It's a bit of a blank canvas, or not entirely blank, because you can see there's a network of pasture, hedgerows, and some arable. You can also see there's quite a large amount of photovoltaics here as well. And the point I want to make about our project, the challenge here is that the land values are relatively high, and that's because of development and the prospect of further development, and also things like photovoltaics. So if we're going to persuade farmers to convert their land to trees, we've got to show them the money, basically, because obviously it's a long-term commitment, and we're going to have to compete with other potential land users. So Bond, James Bond. The point I want to make here is that when I was thinking about the project, I decided that we would set up an environmental impact bond. And I didn't actually know what one of those is. And it was a conversation with Helen Avery on the line who reassured me that it's a relatively simple financial vehicle. And don't worry about that. Worry about identifying your suppliers of services and who's going to buy those services. So what I would say is don't be put off by the complex world of green financing. Focus on your local situation, your environment, and how you're going to improve it, and how the money could flow. So what are the suppliers, the environmental outcomes and benefits that we've identified? So there's a diagram here. So you've got the environmental outcomes we're hoping to achieve on the left-hand side, such as carbon sequestration, habitat creation, improving water quality, reducing flood damage, and public access. And actually public access, given that we're on the doorstep of Exeter and this major new town, is likely to be, well, we're hoping it's going to be one of the things that businesses will want to buy effectively. But let me run through some of these. So carbon sequestration, the beneficiary would be local businesses. The finance mechanism is the woodland carbon credits. And the benefit is obviously to the businesses is offsetting unavoidable emissions. And I stress that because we want to encourage businesses to reduce their emissions, because of course, tree creation is not going to solve the problem that we've got with greenhouse gases. Second outcome, habitat creation. The beneficiary there is developers. The benefit is that they could gain planning permission, and the finance mechanism is biodiversity net gain credits. And what we're testing here is can we actually stack some of these finance elements like carbon credits, net gain, alongside other benefits like payment for public access to a site, alongside some of our community infrastructure levy, to create a bond. So just briefly, some of the other things that we're looking at is that in planting trees alongside the river at the moment, the River Clyst is in very poor condition. That means that the ex-shell fisheries in the ex-estuary are having to pay to clean up the shellfish before they can sell them. So there's obviously a cost to them there. If we can clean up the water by planting trees and buffering the river, then we could hopefully go to them and say, look, there's a benefit to you. Are you willing to provide some capital up front to realise that benefit further down the line? So what are we doing and where are we at with our project? So we bid for and got £100,000, and we've also pitched in £10,000 from our East Devon Climate Fund. And we're going to employ consultants, and they're going to work on essentially 2 work packages. The first one is going to be looking at 10 farms in the Cliffs Valley, and essentially to try to establish what is the tipping point that would persuade farmers to make the long-term change of land use from, let's say, livestock or arable to trees. And we're looking at all sorts of trees. We're looking at natural regeneration as well as, agroforestry and other sort of systems like that. But what is the tipping point? And that's the financial tipping point, but also the social tipping point, because of course farmers, they do care for the land, and they have often got families that are going to inherit the land, and so they're also interested in that legacy as well. So we'll explore that. And the second work package is to work with local businesses and to establish what they're willing to pay for, basically, how much they're willing to pay and for what. So are they willing to buy carbon credits? We're hoping to realise an uplift of about £5 per tonne CO2 compared to the sort of national average. And we've apportioned basically 60,000 for the first bit of work and 40,000 for the second. And our ultimate goal is to produce a 25-year business plan, a financial forecast effectively, of how much money could we draw into the pot, the bond, what the rates of investment, rates of return would be, and to establish a website, a simple website really, so that people can know where to go and how and who to talk to, and some simple marketing material. So that's us. Potential benefits to your local authority. Making your community infrastructure levy pot go a long way. So we're hoping to use some of the pot and pitch into the bond as a starter. We're obviously hoping that this project can help us with net zero targets, and we're hoping to influence others in the process of doing so. So we know that Devon County Council have got a number of county farms, and we're hoping that one of those will be one of the farms that we look at. And really importantly, we're growing our own skills and knowledge and confidence within the council. And what we hope is that we're going to learn a lot of stuff here, and we can apply the funding model to other projects in the district. So we've got quite an exciting cutting edge district heating programme. So Cranbrook Newtown is supplied from an energy centre at the moment, and that we're hoping that could switch to biomass or waste from heat from waste. And we're also looking at delivering, buying land ourselves and delivering housing ourselves. So it's going to help us with that understanding. And just finally, top tips. So identify your environmental objectives, local objectives, obviously. When you fill in the grant form, use local data as much as you can to answer the grant questions and what the environmental benefit is going to be locally. Focus on the buyers and sellers. It helps to have Sahari. So we've got managed to persuade Sahari Studholm, who's a former chair of the Forestry Commission, to be on our project advisory group, and he wrote a really nice, a really great, well-worded support letter, and it obviously helps to have someone with that experience on your team. But you don't need bond, so don't worry about the bond thing. But if you're confused about it, ask Helen. That's me.
Thank you so much, Simon. That's great. It's so great just to have like a real life example shared. So really appreciate your time. With that, I'm going to hand over to Louise Wilson from Abundance Investments, who's going to share about actually a local climate bond, so don't entirely forget about the bond, and how it might be a really interesting mechanism if you're looking to apply, and how it can help you raise funding to fund some of these nature projects. So with that, I will be quiet and pass over to you, Louise. Thank you.
Brilliant, thanks, Helen. Right, let me share this. So good morning, everybody. And yes, maybe not forget about the bond, just but Simon's advice not to worry about the bond. So the most important thing, I think, is identifying the initiatives that you'd like to do, working out how you can generate some revenue from them, and then thinking about how you might finance it. So I will, in my little slot here, I'll just give you a bit of an introduction to who Abundance is, so you understand who we are and what we do. Then I am going to talk a little bit about what local climate bonds are, or community municipal investments, and why, as a local authority, you might consider them. Then I'm actually going to move more into a kind of derivation of this, which is a nature climate bond, to really bring it back to the discussion that we're having today. And then some kind of real life examples of what they've done, how they've been used, and the benefits to the different parties involved. So Abundance, we are a direct investment platform. That means that we bring together people, individuals, members of the public, with money to invest, but it doesn't need to be a lot. Our minimum investment is £5, but who want to deploy their money in a way that makes a difference to, or funds the things that they care about in life. And in particular, we have a focus on climate emergency and everything that we need to do to address that. So members of the general public, with projects, businesses, and now local authorities that need money to take forward the initiatives that they are looking at that are relevant to climate emergency, net zero, however we want to phrase it. We've been going for 10 years. We've done over 120 million for about 50 different investments. And that's from almost 7,500 people, and that number is growing. And for us, it's all about bringing people into the plan to fix this problem, which can very often feel overwhelming and leave people wondering how they can make a difference. And actually, sometimes that can lead to inaction. So this is a way to take action on issues you care about, from the comfort, if you like, of your laptop or your mobile at home, and from only £5. And the last bit I'll just mention is that we are fully regulated. So that's to take away any regulatory exposure. Then last year, we did our first 2 pilot local authority climate investments, local climate bonds. I'll go into a bit more detail. And there's one open now on the website for Islington. So if you go to abundanceinvestment.com, you'll get a real live example of how a local authority in London is using it to fund a range of different initiatives within the borough, from LED lighting to converting one of their rubbish trucks into electric, and there are 4 other things that they're using the money for. But just to give you a little bit of background on what these are and why think about it. So the key application is that, as local authorities, you're raising money all the time to cover the capital costs of various different projects within your area. So, and most of that funding comes from central government, something called the Public Works Loan Board, which, if there are any finance colleagues on, will be very familiar with. So what the local climate bonds do is, in effect, supplant central government with residents and other members of the public. And the reason for doing that is the additional social value that this creates. It raises the profile of what councils are doing, because I think it is generally understood that the awareness of residents in terms of the various different initiatives and services that council provide is actually pretty low, and very often quite negative. And in fact, the less that they know, then quite often there is a correlation between how little they know and their perception. So this is a way to really showcase the very positive action that councils are taking on climate emergency. It also builds connections then, because it's actually those individuals' money that has gone towards funding those initiatives. They feel like they're part of the plan. They have a sense of ownership. I should say that this is debt rather than equity. So, but nonetheless, there's quite a strong link that's created from that, and I will show you that in the West Berks case study, which was the first local authority to do one of these. Rather than paying interest to central government, money doesn't come free from central government. Actually, it's paid to residents, and so there is the potential for some local economy, circular benefit from that. And then we've also built an interest donation feature. So with the 2 bonds that have already completed and started to pay interest, we've given people the opportunity to donate some or all of their interest back to additional initiatives in the borough, and that builds further bridges and just makes people feel part of that wider community. So then, more specifically on a nature climate bond and the topic for today. So this came out of discussions with Edinburgh City Council as a way to fund nature-based solutions. And the reason for having that discussion is that many of you will know that one of the key challenges when it comes to funding nature-based solutions, or to getting budget allocated to it, is that they don't have an immediate economic revenue stream. So leveraging the I've called it the cross-disciplinary capabilities and responsibilities of a local authority, and using the fact that we can then take the kind of holistic responsibility that an authority has to actually look at a range of different initiatives covering nature-based solutions and ecosystem services, with other kind of initiatives that might generate money, or whether it's through generating electricity, which will generate a payment, or through energy savings, which generate cost benefits, that those can be looked at as a way to cross-subsidize some of those nature-based initiatives, which are still going to be absolutely essential to reach net zero targets. So how can a local authority use that unique position that it's in to take a holistic approach to this, and to fund some of the things that don't meet the standalone commercial test? So the additional benefit then is obviously that it will, but back to my comment on the previous slide about how climate bonds raise profile of what local authorities are doing. Building this in actually then also raises the profile of some of those nature-based initiatives. It catches people in attention, and it amplifies the effect through investment. So we have seen that when people have a financial stake in something, then they're listening much more closely to what's happening. But more than that, it becomes it has a galvanizing impact. It makes them, because they then feel a much more positive relationship to this problem, it actually kind of makes them think then about what they can do in their own sphere. So it has this amplifying effect, as I've called it. And the Nature Climate Bond was included in a £1 billion route map, which was an initiative that Scottish Wildlife Trust and Scottish Environment Protection Agency ran over a period to try and bring to light a range of different models for how to drive £1 billion into nature-based solutions. And this page here is taken from that report, which you can find on either the Scottish Wildlife Trust or SEPA website, but it really just summarises what I've gone through in that previous slide. Just as a kind of little bit of a deeper dive into what they're about, but in some ways the kind of 4 things, if you like, that it would be useful to take away. And in particular, if you're going to talk to finance colleagues about this, the 2 top ones are the most important. When we were conceiving community municipal investments, local climate bonds, we knew we had to really kind of solve or create 4 features. First of all, it had to be as easy as possible to use as borrowing from central government, which is very simple. So it's a fully templated process that already exists. So if anyone was going to consider looking at this for a way to fund a nature-based solution or part of the application, none of that already is there. It's really straightforward. It was pulled together with the input of 4 different types of local authorities to make sure that it captured all of the needs or specifics of different local borough or local authority constructs. Secondly, and really importantly, it has to be cheaper than central government borrowing. Otherwise, there is a legal obligation for the council to get the lowest cost capital, so or best value capital, but generally that comes down to cost, so it's cheaper. The third thing, and I've talked about this, is that it does create this platform to engage with residents, build trust, and create additional social value and economic benefits. And that finally, it should be as accessible as possible. And I've mentioned the £5 minimum, so that improves financial security, but also is a way to get, that it is something that is relevant for as many residents as possible. This little diagram here, I'm not really going to spend too much time on it because I think these slides will be shared afterwards, but it basically just is the flow of where the funds come from and how money gets paid back to residents over time. I mentioned I'd talk about West Berks. This was the first bond that was done in the first half of last year. There was a £1 million target, which was raised ahead of time. West Berks used the money to fund solar panels on council buildings. The saving was 0.5%, and when every basis point counts, that was a significant driver of value for the council. Bearing in mind that this was the first one and a standing start, it was fantastic that we had 22% of that overall money coming from residents in West Berkshire, and that counted by number for 10% of people. And it was also really important to us to see that quite a lot of the money came in small amounts, because that was satisfying for us, this desire to really make it accessible. So a quarter of people invested less than £100. And then on the interest donation piece, which if you asked kind of mainstream providers of finance, they would just not believe that this would be possible. But we knew that actually, if you create a connection for people and you show them how their money can really be a positive above and beyond just the money that they're investing. So having 16% of people donating 11% of their first interest payment was fantastic. And I think the quote from Helen at the bottom there kind of summarizes, if you like, everything that we hoped we would get out of this. So feeling good to invest in something local, which would have real benefits for local people, as well as obviously the climate emergency positive impacts that it would have. And then there's also a quote from the 151 officer as to why it made sense from West Berkshire's perspective to look at this. And Joseph has been fantastic in, I think, participating in roundtables, but also being very willing to talk to any finance peers at other local authorities who'd like to explore this. And then the last bit just to mention here as well is that Green Finance Institute has created also a brilliant website where there's a whole lot of resources available to kind of help understand that, so you don't have to go deep into the world of what these are. There's lots of resources pulled together in one place. So the link is down there, and you'll be able to get that when the slides go around afterwards. And then that's my details and the website as well, where you can see the Islington bond. So overall, I think the key thing, just to kind of wrap up before I hand back to Helen, it's once this is a method, if you like, that already exists for raising capital. It's proving the value of getting residents involved in what you're trying to do. But overall, I think for this conversation, it can really help inspire or create templates and models for ways to help more nature-based initiatives get funded, leveraging the fact that as local authorities, you sit in this unique position to be able to kind of look across a range of different initiatives and fund them together. So I hope that might spark some inspiration and a raft of really exciting applications into the NEIRF.
Thank you, Louise. Yeah, we certainly hope so. And thanks for very inspiring. And thank you again to Simon for sort of putting it in sort of a context from a local government perspective. So I'd like to, we've got a couple of questions, a couple have been answered. So if you can check out the answered tab on the Q&A. I'd like to invite everyone back. So Alison, and also be joined by Andy Slaney, who's overseeing the NEIRF, the Environment Agency, to just answer some of your questions. We've got about 6 minutes left, so it might be a bit of a quick fire round, but I can only see 2 in the Q&A. If you've got more, please put them in, or maybe if there's a lot of information, so maybe you've got more questions, you're also welcome to drop us emails afterwards with those questions, and we'll put together an FAQ. So there's a question here from Tim Youngs. What level of evidence initial commitment do we need from potential investors and buyers in order to give confidence in our application? Andy, I was wondering if that's one for you.
Yeah, sure. Thank you, Helen, and thank you everyone for your presentations. The level of evidence, essentially, I think it reflects the investment journey that Helen was describing earlier. So at the very start of the process, you obviously have virtually no engagement and no commitment from them. And at the end of the process, you'll have their complete commitment and they'll be paying you money. So it depends how far along that journey you get. The more commitment you can obtain, obviously that will support your application the more. But something like expressions of interest or letters of support in that kind of way would be very helpful in supporting your application.
Thanks, Andy. I'm also wondering, I'm just thinking about looking at Alison about the Sharepoint and how that's really helpful. I wonder if we can post the email that people can email into the chat if they want to get more information. You'll also see the video from today, so you can go back and digest it a bit more, and some of the presentations that might be helpful just to post that there for you. As a question from Gwyn Kinlock, is the intention of the grant programme to identify a few models that can be applied nationally, or will it be for individual authorities or organisations to apply the most appropriate for their own circumstances? Alison, Andy, which of you might like to take that one?
I'll take that one. Thanks, Helen. So as we said, we do want models to be replicable and scalable, but we're not necessarily looking for a project that can be applied nationally. We do want to understand that it can be used by other organisations, whether that's other local authorities. So there's an aspect of replication and there's that aspect of scalability. So I think in terms of the bids, we are looking for innovation across the whole fund. So it's really important that we get a range of different models that are demonstrating different approaches from organisations. So I think in terms of people's individual bids, it will need to apply to your circumstances, but you need to think how it can apply for other organisations as well. Thanks, Helen.
Brilliant. Thanks, Alison. And then a question from Steve Palfrey. Is there someone to speak to about potential bids in order to get a sense if on the right track and how to improve bid quality? I don't know if I should offer ourselves up, but we are at the Growing Finance Institute are very happy to speak to you if you are considering a bid, and just for 20-30 minutes on a phone, run through with you some ideas with you, if that's helpful. There are obviously, you can pay an advisor to help you work through that. Andy, Alison, have you seen on bids how people have worked in putting those together?
Yeah, I think a lot of the successful bids have worked with advisors in the sector, because it's obviously a pro bono element to bringing forward projects. I think also just to highlight that we have got some Q&A sessions in the new year that are advertised on our Sharepoint site. So that may give you an opportunity to ask more targeted questions as you develop your ideas.
Simon, yeah, I'd love to hear, what did you do on your application?
Yeah, I mean, I found the webinars really helpful. So hearing from other projects, as we're doing today. So get yourself on some of those. Obviously, if you can get yourself on one that's most close to your potential project, then you can learn an awful lot in that way.
And there's obviously the Sharepoint. And then the final one I think for today we'll take is aggregation of projects, e.g. the whole river basin scale is essential to enable investment at scale by institutional green finance investors with governance use of proceeds reporting. Would this kind of business model be eligible? Andy?
Yeah, thank you. Absolutely, we're very interested in the kind of scalable models or even relatively large scale such as this, depending on what you're looking for. I think the only thing we need to be aware of is the complexity involved in this. And I think one of the primary aims of this fund is to make sure that we can demonstrate the revenue that can be generated. And I think understanding the revenue flows that can come out at a catchment scale in an equitable manner would be very, very essential in sort of one of these sort of approaches. But absolutely, those sort of business models would be the things we'd be very keen to see.
Fantastic.
Just,
please, yeah, go for it.
Just chip on that, because I think it's a really interesting question, and it's a kind of, you know, it's one of those things that, you know, doing something bigger certainly makes access to finance easier in principle. But what, you know, having looked at these across a number of different areas, if it doesn't deliver economies of scale, then actually sometimes all that happens is it just makes it much harder to get things done. And breaking them down, but trying to do it in a rollout fashion is sometimes more straightforward. But if you can crack the nut of aggregation, then brilliant. I did meant to mention, you know, when I was just explaining what we do, is that the average borrowing size for local authorities is about £7 million, and that is too small for institutional capital. So that is also one of the other reasons that, you know, we are doing much smaller amounts but regularly. So that is to kind of also help solve the problem that environmental impact bonds, you know, green finance of their institutions, you know, they're looking for 9-figure sums, which very often doesn't suit the kind of capital requirements for a lot of these projects.
That's really helpful. Thank you, Louise. So just noticing the time, so we're going to wrap up for today. Just as Andy just mentioned, as we mentioned earlier, there are more sessions in the new year where you can come and ask questions. There's going to be an FAQ put up as well, I believe, on the Sharepoint, but certainly the information where you can find that will be there. Here are the sessions now for you. You'll find the details of how to sign up for those on that Sharepoint. You will find them on the Hive website and Ecosystems Knowledge Network website. They should be up at the beginning of next week, if not today, but definitely early next week. So you can sign up to those now. Just a really big thank you to Alison and Andy of the Environment Agency for sharing this with us today. And thank you to Simon and Louise for giving us some inspiration and ideas that hopefully will encourage some applications. And thank you to those in the room and for all your questions. It's been some really great questions. So thank you so much, and enjoy the rest of your day and good weekend.
Thanks, everyone.
Cheers, Helen. Thanks, everybody. Bye-bye.
Bye.
Thank you.